Traders. I know knowing the reversal is the most crucial thing that every trader should know, but not every trader is able to identify these reversals. Being unable to recognize reversal in forex trading can have significant consequences, leading to financial losses and other trading challenges. And so, how do you identify a reversal? Let me show you this easy strategies that every beginner should use. The first strategy is called break of structure. The first thing we need to do is to identify the trend direction. Is it an uptrend or is it a downtrend? So right now it is an uptrend because price is making your higher highs and higher lows, higher highs and higher lows. So we can draw, like a little trend line connecting all these higher lows right here. Next, you want to wait for the trend line to break because this shows us that price is reversing and it's going to go back down right now. So let's see what happens next. Okay, you can see price is beginning to break this trend line. Do not enter when the trend line breaks because the overall trend is still an uptrend. So it can be a fake out. So you want to wait for price to form lower highs and lower lows to show us that, right now, price is in a downtrend instead of uptrend. So right here you can see price is pretty much just going up to form your lower high. And you also want to make sure that you look towards your left and see when is the last higher low. So this right here, this is the last higher low. As you can see, higher high, higher low, and the next is higher high. And then where is the next higher low? So this is the last higher low. So when price break this level, right, it will essentially tell us that price is reversing and it's going to become a downtrend right now. And right now we still wait because price can easily go up from here and continue this uptrend. Okay, you can see price is kind of like consolidating around this little area here. So we can draw, like, this little resistance area here. So the next time price essentially come back up here, we can look to sell it down because this is like, essentially the new lower high right here. Guys, this is your entry. You can see this big, bearish engulfing candlestick, just like showing us there is a lot of momentum, the seller's momentum, and it's pretty much just rejecting this key resistance level. And right here, this is your lower high. You can see these highs are lower than the previous high. So right now, this shows us that, okay, the uptrend is kind of losing momentum and price is essentially going to become a downtrend. So we can enter for a sell right here. So this will be your entry and your stop loss. You can place it at above this key level, and then you should be placing your take profit at the previous higher low. Look towards your left and see where it's the previous higher low, which is right here, can draw a little support area right here. And this will be a take profit. Let's see how this trade plays out. As you can see, price has pretty much just went down and smashed our take profit. Here's another example for you guys. As you can see, right now, price is still in an uptrend. So we can draw, like, a little trend line connecting all the higher lows right here. So now we want to wait for the trend line to break right. So let's see the trend line. And right here. Yes, essentially broke out the trend line. So we do not want to enter here for a sell yet. We want to wait for price to show us some sort of, like, lower highs and lower low to show us that, okay, the buyers are losing steam, and this uptrend is going to end. So we can do that by looking at momentum, the candlestick momentum. So you want to see green candlesticks getting smaller and smaller and the red candlesticks getting bigger and bigger. And right here, you can see price is starting to form lower highs. You can see this high is lower than this one, and this high is lower than this one. So the next time price forms a lower high, we should be looking to sell it down, because this shows us that price is reversing, the buyer's momentum is gone, is the seller's market right now. So this big fat rate candlestick will be our entry and our stop loss. Put it a few pips above this lower high. And if our take profit, put it at 2 times your stop loss, which is right here. And prices pretty much went down to hit our take profit, making this a very successful trade. For the second strategy, we'll be using key levels. The first thing we need to do is to find a key level. Key levels are basically levels where price reverses from. So once you look towards your left, you will see that right around this level right here. This is when price went from going up to going down. So this is our key level. And, guys, you do not want to enter for a trade when price is in the middle of nowhere like this, alright? You want to be patient enough to wait for price to reach to the key level. This will give us extra confirmation when price actually reaches this key level. You cannot enter yet because you cannot assume that price will reverse because price can always break through it. So we need to have extra confirmation to show us that price is actually rejecting this level. And we can do that by looking at overbought and oversold levels. So you want to add your stochastic indicator next. So you press this indicator button right here and search stochastic. And just choose the second one right here. And then you can see. Now we have a stochastic indicator, and you can just leave the settings as it is. So once you have your stochastic, you want to wait for the two lines to cross over each other. And right here, you can see how, like, the blue line has completely crossed over the orange line. And at this 80 level, it also means that price is overbought and price is about to reverse. So we can enter for a sell right here. And your stop loss, you can put it at the key level. And next, for your take profit, you want to look towards your left and see where price last stopped at, which is right here. We have managed to smash our take profit for this trade. Another successful trade in the back. The third strategy to spot trend reversals is by using another indicator called the exponential moving average. This one is my favorite strategy, the one that I always use. So you go onto the indicator tab and add 2 exponential average. I already have it right here. Once you have added 2 exponential moving average, change one of them to 8 and the other change the length to 14. Once again, you want to find your key level first. And you can mark your key level right here, because whenever price goes up all the way up here, it always end up reversing and going back down. Once again, reversing and going back down. So now we want to wait for price to approach this key level. Okay, so when price reached the key level right here, you want to wait for the moving average to cross over. You want to wait for these two lines, this blue line and this red line, to cross over first before you enter for the trade. And right here, you can see, like, the blue line is starting to cross over the red line. So if you go down to the smaller time frames, like the 1 hour or the 15 minutes time frame, you will see that the moving average has already crossed over. I'm just using the daily time frame to kind of show you guys right now. But if you want to get a better entry, I will advise you to go down to the 50 minutes or even the 1 hour time frame. And you will see the moving average has already crossed over. It's just on the daily time frame. It's a little bit slower. So our entry could have been somewhere right around this area here. Because at this area, this is when the moving average crossover on the 1 hour time frame. So our stop loss, we can put it at this key level right here. And once again for a take profit, you look towards your left, you will see this little support area being formed right here. When price went back down here, it always reversed and go back up. So this is our take profit right here. And once again price has managed to smash our take profit and close this trade.